Hey, my fellow property managers, Marc Cunningham. Happy New Year. Hopefully your year's starting off well. We're recording this video here the first week of 2024. What is the difference between an accidental landlord and an investor? And not just understanding what the difference is, but how then should you as a property manager market differently to accidental landlords versus investors? Well, that's what I want to explain and offer some thoughts on how to market to each of those. And then at the end of this video, I'm going to tell you which, in our opinion, is the better owner client. Who do you want? Do you want accidental landlords or do you want investors? Before we get into this though, we have a kind of a cool, exciting announcement. We at PM Build, it's our property management education site, we've partnered with Enterprise Bank, allowing you, property managers, to use your Enterprise Bank credits, assuming you're an Enterprise Bank client, to purchase any of the stuff we have. We've got video coaching, we've got system manuals, we've got forms packages, we've got training on income, we've got coaching, we've even got an event at our office where you can come spend a couple days, our Visit Grace event. Any of those items, if you're a client of Enterprise Bank and as you earn your earnings credits and you get to spend those in our industry on behalf of those earnings credits, well, we have partnered with Enterprise Bank so you can actually pay to come to our office with your Enterprise Bank credits. Now, if you're not a client of Enterprise Bank, why not? Is my first question to you. Jump on their website, check them out, sign up. They do all of your banking and trust accounting for your property management business. And as I said, as an added benefit, you can use the credits they pay on the interest you earn. I know it sounds a little confusing. Earn credits, and then you can use that to come visit me in Denver. So, questions, jump on our website, drop me an email. Happy to explain how that works, but that's a pretty cool program. We're excited to be partnering with Enterprise Bank as we step into 2024. Okay, so investors. How do we understand an investor? Just so we're all on the same page here. Investors are people that bought the property with the intention of turning it into a rental. That's what we mean by investor. Very straightforward. When we say accidental landlords, what that means is those individuals did not buy the property initially with the intention of turning it into a rental. They bought it to live in it. Now they have to move out for some reason. Maybe they got a job transfer, something in life happened. But rather than selling it, they're going to convert that property into a rental. So in the industry, we call them accidental landlords. Now here's why it matters. Because those two groups of people, investors, accidental landlords, have different pain points. They want to know different things from you as a potential property manager. So what do the investors want to know? What are the investors' pain points in potentially hiring you to manage their property? Well, it's a couple things, and it's pretty straightforward. They want you to maximize their income. They bought that thing to make money. You better make sure that it makes money for them. Part of maximizing income is, of course, minimizing expenses. Part of that is they want to know a lot about maintenance. Tell me how much maintenance costs. Tell me about your vendor selection process. Tell me how the vendors bill. They want to know a lot about maintenance, the costs associated with maintenance, and your costs. They're very price sensitive. Why? Because they bought that to make money. And every penny they're paying you in the form of a property management fee is one less penny in their pocket, and they're price sensitive by nature. They bought it to make money. That's just their pain points. So what do we want to stress to those investors? When a lead comes in, one of the first things you need to find out is this an investor or is this potential client an accidental landlord? So if it's an investor, here's some things you want to stress to them. You need to make sure that you understand cash flow. You understand their goal for cash flow versus appreciation. Because if their goal is cash flow, they don't want you to spend a nickel on repairs unless it's absolutely necessary. If their goal is appreciation, then they believe in putting money back into the property to help it appreciate faster over time. You should know that as a property manager, which one is more important to that individual. You should know and be able to explain to them how working with you will help them maximize their income. Part of the way, by the way, that you maximize their income is this last one here. You're going to minimize their turnover. Talk to them about the important things that you're going to do on their behalf to minimize turnover, thereby reducing the expenses they have on the property, reducing the vacancies they have on the property, and increasing their income. You want to also stress things like investor calculators. Your website should have things for investors that they can plug numbers in. You should have education on your site that is investor focused, investor driven. And you need to make sure that you speak the language and you educate investors in their language. So for example, do you know what a cap rate is? I think we have an older video in this whole stuff we do here on cap rates. go back and watch that if you don't know what it is. If you really want to get educated on that, look at the training we have on working with real estate investors, understanding how to speak the language of real estate investors. It's really not that complicated, but you as a property manager need to have a basic understanding so that you don't get intimidated and you can communicate with those investors when they come along. Now, before we pivot now to the accidental landlords, I want to thank the sponsor for this video, Origins Group. If you're a property management company or company owner, did you know that you have availability to apply for the ERC, the Employee Retention Credit, through the IRS? Now, if you said, well, Mark, I checked that out years ago, I wasn't eligible. We weren't eligible years ago either, but the rules have been changed, my friends. Now, to give you the long description of this, go to our podcast. You do listen to our podcast, don't you? I hope you're listening to our podcast. Our property management podcast, it's a property management business podcast. Search for it on wherever you listen to podcasts. Not too long ago, I did an interview with the owner of Origins Group, and we talked all about the ERC credit, how property managers can get it, why they should be applying for it, who's eligible, what the requirements are, how you do it. This group can do that for you because there's a lot involved with it. But we did it. We did it with these folks here. I recommend them. So check them out. Okay, what about accidental landlords? What do we want to stress when marketing to accidental landlords? Well, number one, we want to stress property protection. That is one thing they're very, very concerned about. They lived in that property. That was their house. That was that window right there, that was their bedroom window. The tree in the backyard, that's where they had the swing that their kid used to swing and climb. There's an emotional attachment to the house. Now, I know we say, well, gosh, we've got to make sure they separate themselves emotionally from the house. And you're right, but there's always going to be some emotional attachment. That's just the nature of people. They lived there. So we need to make sure that you understand that and you're communicating in such a way to them that they understand that you understand. They want to know, that's the question. Number three, that's the question they want to know. Who's going to be sleeping in my kid's bedroom? That's where I rocked my baby. That's where I laid my head. Who's sleeping in my bedroom? They want to know a lot about tenant selection. See, the investors don't really care a whole lot about your tenant selection process. You know who does? Accidental landlords. It's one of the first things they want to know. How are you qualifying tenants? Who's living in my house? Who's eating in my kitchen? Whose car is parked in my garage? That's the way they want to be thinking. So what do we stress in the marketing on this? Well, we want to have rent versus sell education because they're considering both. Should I rent it? Should I sell it? So you want to have a lot of education on your site that talks to that, rent versus sell. You want to talk about how you're going to help them protect the value of their asset. That house is their house. How are you going to protect that for them? Now, the other good news is they are typically less price sensitive. They're not as concerned about exactly how much you charge because they're not in this most of the time for immediate cash flow. This is their house. They want protection. So it means they're going to be a little bit less sensitive to pricing that way. Now, here's the big mindset difference. For investors, the property is simply a means to an end. That's all it is. I bought this property for cash flow, for appreciation. I bought this to make me money. The goal isn't to own this property. The goal is to make money by owning this property. And the property is just a means to an end. Now, that's not a right or wrong, but that's kind of their mindset, which also, on kind of a negative standpoint, that means they can view the tenant as a means to an end as well. They can be a little bit less understanding to the needs of the tenant. Why? Because the property is simply a means to an end. Now, the difference between the investors, I'm confusing myself here, the investors, the property is a means to an end. The accidental landlord, the property is the end. Like, that's it. They want to hold on to their property. Yeah, of course they want to make some money from it, but the property is the ends. They have that attachment. You just need to understand that. This is not a right or wrong at all. It's just an understanding that you as a property manager need to have. So, to sum all that up, which one's better? Would you rather work with 100 accidental landlords or 100 real estate investors? My opinion on this is that's a stupid question to ask because there are great accidental landlords and there are great investors and there are terrible accidental landlords and there are terrible investors. Don't fall into this trap of thinking that one category is better than the other. I don't believe they are. As long as they understand the way you operate, they're willing to trust you, they're willing to view you as the expert, they're willing to be reasonable in their expectations, then it doesn't matter. What matters is ensuring that you communicate with them differently on their pain points. And if the investor's a great fit, then great, you should represent them and work with them. If the accidental landlord's a great fit, then you should work with them and help them out as well. Hey, my friends, how else can we help you? Jump on our website, pmbuild.com. I mentioned our podcast. Hopefully you're listening to that. We do podcasts every 2 weeks. It's like this, but in longer format, so we're able to talk in more detail on things. And don't forget our new partnership with Enterprise Bank. Figure out that maybe you want to come visit our office in 2024 at one of our Visit Grace events and have Enterprise Bank pay for it, you to do that. Until next time, my friends, and as always, I wish you success.